As a business owner, if you have had a group plan in place before, are you sick and tired of having to wait until you get your renewal rates every year before you can make important decisions like making capital improvements or hiring a new employee or giving a key employee a raise to keep her from going down the street to work for your competitor because he's offered her a higher wage, but you can't make that decision because last year you had a rate increase of 35-40% on your health insurance, and you don't know what it's going to be this year because your rates don't come out until about 30 days before they become effective. So you are anxiously waiting to see what that's going to do because you can't go up on your prices 30 or 40%. I don't know about you, but I don't like that. That can be devastating. You might lose a key employee because you can't answer that question yet. Knowing that, a lot of small business owners just choose not to even offer group insurance. However, you're trying to attract and retain key employees, and so you really feel like you need to offer health insurance, but it's a dilemma. What do you do? How would you like to have total control over your cost, your employees' health insurance plans, and not have to worry about shopping the market every time you get a rate increase or raising your deductibles and co-insurance? The plan I propose does exactly that. It gives you total control over your cost, and I'll explain that in just a minute. But first, I'm going to tell you a little bit about me, and then I'm going to explain to you how the problem of group insurance got you where you are right now. First of all, I'm an independent agent, which means I don't represent a single company. I represent my clients. I've been in business since January 1991. I used to own a substantial employee benefits business. I was a Raymond James financial advisor and registered investment advisor, did all that for over a decade, probably about 12, 15 years. And I sold my book of business and decided to take advantage of the booming real estate market. And that was wonderful for quite a few years, about a decade or more, a little more than a decade. And I also had the privilege of riding the real estate market all the way down. When the ACA was passed, as you know, there was a penalty put in place, and that penalty was put in place for anyone who refused to purchase an ACA plan. Well, the penalty was repealed, and as of 2019, there's no more penalty. So you don't have to buy any plan if you don't want to, or you can buy outside the exchange. Now, we're going to come back and talk about in a minute what your options are for buying outside the exchange. But the first thing I want to do is tell you a little bit about the difference between group insurance and individual plans. First of all, group insurance is owned by the employer. The owner of a policy is the only one that can make the changes to the deductible or cancel the plan altogether. Employee may work for an employer with a group plan and can cancel their coverage, but they can't cancel the overall policy, and the individual employee may have some options to choose from if that plan allows it. But at the end of the day, the employer has the owner of the policy, which is the employer for all group plans, is the sole decision to make as to who is going to be the insurance provider, what the deductible is, and so on. Individual plans are owned by the primary insured person under that individual policy. You as an employer could offer to payroll deduct individual plans for your employees. And if you have a cafeteria plan, even put their cost of it under a cafeteria plan and pre-tax it, which saves you money on Medicare and FICA and FUTA, saves them money on income taxes. And you can even offer an allowance to pay part of their premium. Now, if you do this, I recommend that you do first dollar versus a percentage. For example, you might want to do $250 per month per employee, or $300, whatever you're comfortable with. And you can even vary that amount for key employees so long as you don't discriminate based on a protected class. You can do more for one than the other. Now, let's talk about the problems of group insurance, and then we'll explain why we can solve this problem with individual plans. With group insurance, your renewal rates are determined by your group's census. That means the male, female, average age, to who the tobacco users or non-tobacco users, and also in health conditions and claims history. Yeah, if you have a small group, and that means less than 50 employees, you're not actually required to have group insurance, but 50 or more full-time employees, you must have at least a minimal essential coverage plan, which I also offer, or a true group plan, which I also offer. But if you have less than that, as a small employer, especially if you've got 5 employees or 12, something like that, it's easy for your group to become unprofitable to the insurance company. One person has a major claim, like a heart attack or a baby, then all of a sudden, your group is now unprofitable to the insurance company. When that happens, the insurance company is going to want to mitigate their losses by going up on your renewal rates to the maximum amount allowable by law. That amount varies from state to state. In the state I live in, the maximum is more than 40%. Now, I don't know about you, but most people can't go up on their prices of their products and services 40%, but your cost can go up 40%. And unfortunately, you don't get your renewal rates until about 30 days before they're due. And that's why you can't make budgetary decisions with a group plan. So a lot of small employers opt out. They say, I'm not gonna do that. Let them go get their own. And some will say, well, I'll just pay them a little more so they can afford to do it. That's a mistake. You pay them more, they gotta pay income tax on that. You gotta pay FICA, FUTA matching. It makes your workers' comp rates go up. In some cases, your general liability rates are higher based on payroll. So, question is, how do we solve this? Here's the way my program works. First of all, individual plans, your rates and the rates for an individual plan are set in stone with the state insurance commissioner. When a company offers wants to sell individual health insurance in your state, they went to the state insurance commissioner and said, these are the rates that we want to sell this product for this age, and so male and female in some cases. And when it's approved, the only way those rates can be changed is for the insurance company to go back to the insurance commissioner, who's elected in most states, and get the commissioner to agree to it. It's guaranteed renewable to age 65, which is another benefit of this plan. So now, if you start out and you come up with a flat dollar amount per month for your employees, don't do a percentage. That's a mistake. And I'll tell you why. You're going to do the first dollar up to whatever budget you want to, which that means it will not change unless you change it. So your costs are fixed this year, next year, and the year after, unless you elect to increase it. Second of all, when an employee leaves you, since they own the policy, you can't cancel their policy, but you can stop paying for it or stop payroll deducting for it, and just by notifying the insurance company or me, your agent, and I'll help you get that done. The employee then receives a direct bill, and they have a choice to continue to pay the premium all the way up to age 65, or they can cancel anytime they want by simply not paying the premium. That's simple. No more COBRA administration, no more state continuation of coverage continuation, so it's less administration on your part. Also, with this program, with individual plans, there are no minimal participation requirements like you have with group insurance. There are no rules saying that you must pay a percent. With group insurance, you must pay at least 50% of the employee's cost of the insurance coverage, and that is part of the problem. You don't have that rule, by the way, with individual plans. Let me share with you how all of this goes bad with group insurance. And I've seen it happen time and time again over the years. You start out, you're optimistic about your business, you've got the best product, service, skill, and there's a demand for it in your market. So you're so optimistic. You put in a group plan. You're going to set the world on fire. Everybody's happy at first, but then one day when you get that 40% rate increase because your group's unprofitable, you shop around, you find out all the other companies, nobody really wants an unprofitable group, so they're all going to give you a high rate, and the highest they can give. So you raise your deductible. Then your employees start grumbling about it, and that's the opposite of what you want. You put the health insurance plan in because you want to attract and retain employees, good employees. You want them to be happy. Now you're paying for something that you don't want to pay for in the first place, and they're not happy. That's not good. So you do this and you raise your deductible again. This keeps going on until finally you go to them and say, look, I can't afford to pay the full cost of your health care premiums, and I can't raise the deductible anymore, or you guys get mad every time I raise the deductible. So here's what we're going to do. You're going to have some skin in the game. Instead of me paying 100% of your premium, I want you to pay a portion of it. Now, you got to pay for at least 50% as the employer. But I'll give you an example. I had a group one time, 500 employees, and this was back in the 90s, so the numbers were a lot smaller back then, but we went through the same scenario, and they went to their employees and said, we want you to pay $5 per month for your health insurance. All of the I'm talking about all of the 18 or 19-year-olds, every one of them opted out. They said, we don't want this. I went back to talk to them, tried to encourage them. Look, this is $5 a month. You're protecting yourself and your family from financial catastrophe for $5 per month. I had one boy, he said, I can buy a pack of cigarettes for $5 a month, and others said, I can just go to the emergency room, and so I'm healthy, nothing's going to happen to me, and that's the problem. They don't realize that something could happen like what happened to one of my other clients who had a 19-year-old employee who fell out of a tree stand on the first day of hunting season last year, broke his neck, and had to have major surgery, okay? So the young people drop off, average age goes up. That gives the insurance company another reason to raise your rates, because now your census has changed, your average age is, and so now your rates are higher. So the next thing you know, your 20-something-year-olds are dropping off, and so on. And eventually what happens is the only people who are left are those who have major health conditions and can't go get policies elsewhere because they're uninsurable unless they get on the ACA exchange, which is expensive, high deductibles, big out-of-pockets, unless you're getting subsidized by the government. Well, that's the problem. That's called adverse selection. I've literally seen it put companies out of business. Now, here's the good news. We can solve this just by keeping it from happening in the first place. When you put in individual plans, first of all, individual plans sold outside the exchange do not have to comply with what the government calls essential health care benefits, so you don't have to cover maternity. That keeps the rates down. I mean, substantially less than group insurance or ACA plans. Here's the great thing about this program. It's easy to administer. When you come up with this plan, all you have to do is come up with a flat dollar amount that you want to spend. Email me every time you hire an employee, their contact name, let them know that I'm going to be calling them. And I had one person say, we can't give that information out. If you tell the employee on the front end, would you like to have health insurance with our company? And if so, you need to talk to my agent. Would you like for me to have that agent call you? Or you can give me the office number and I can call them at the office and leave a message for them to call me back. But I've got to talk to each individual. So you give me the contact number and name, could be the office number, and your budget, because it can vary. You might want to do more for one than the other, so long as you're not discriminating, like we talked about before, a protected class. and when you want their coverage effective. That's simple. When you terminate an employee, you simply shoot me an email. Now, you may be wondering about what kind of plans are you going to sell. Well, the good news is you don't really have to worry about that. Now, the next video that I'm going to present does go into the types of policies that we offer your employees, just so you'll know. But in reality, you don't really have to be concerned about that. All you care about are that your employees are covered adequately, they're happy, and what it costs you, okay? What we will actually do is custom tailor each policy to fit that employee's needs. If you come up with a budget, for example, let's just say $250 a month, your young people, 22, 23, 24, maybe all the way up to 27, 28, probably won't cost them a dime. So they're happy. That kid that falls out of the tree and breaks his neck will be the happiest person be happy with his company. He won't be happy that he broke his neck, but will be happy to tell everyone what a wonderful employer that he has for providing the health insurance. Those of us that are older like me will be tickled pink that you spotted them $250 head start, because I can't go buy it out there on my own with a $250 discount. So it's a win-win there. Now, for those that spend more than $250, you're going to payroll deduct it, and if you have a cafeteria plan, you can pre-tax their portion of it. But each employee has some say-so. If I tell an employee, wow, this is, if you want to buy this plan, it's going to cost you $150 a month over and beyond your employer's allowance, and they say, I can't afford that. Well, the next question is, how much can you afford? They tell me. I said, well, to get there, can't have the dental, might have to have a higher deductible. This is what you get, but it fits your budget. So now every single person has say-so in their policy design. So if somebody grumbles about their deductible, that was their decision. You had no role in that. So no more grumbling. Everybody now, when there is a rate increase, and there will be annual rate increases in most cases, but it's based on their age, not the claims. And it's usually about 3 or 4, maybe 5% tops, okay? That's passed on strictly to the employee because you're paying the first dollar up to that set amount. If you do a percentage, all your young people are gonna opt out, and you're gonna have adverse selection again. So that's the program in a nutshell. If you want to get started, it's real simple. You just give me a call at the number below, or shoot me an email. I'm licensed in Mississippi, Alabama, Louisiana, Texas, and Georgia, but it's easy for me to get a license in another state if you happen to be outside that area. I also have the potential to offer some products in other states. But anyway, that's my story in a nutshell. I, by the way, can service, since this is all of our enrollment process is done over the telephone with e-applications. I have clients all over the nation. I even have a group plan in Chicago, Illinois, believe it or not. And so no matter where you are, I can help. The other thing is, if you do need a true group, nobody's too big. I can handle I have an affiliation with a third-party administrator that's headquartered in Mississippi, where our cost of living is the lowest in the nation, which means our admin costs are less. But anyway, that's a story for another video. My name again is Daryl Breland, and I thank you for taking time to watch this video, and hope to have you as a client. Thank you for attending this, and finally I would like to say that if you contact me, you do not have to worry about your information being sold to robocallers or telemarketers. I'm the only person who you will deal with. That is my cell phone number that I've given you. So feel free to give me a call and know that your information will be secure and safe. Thank you so much. I hope to hear from you.